Hello everyone and welcome to this presentation on the correct way to trade support and resistance. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading, and support and resistance is a very common way in which to trade these days. It's been around for ages. I first started trading with support and resistance some 35 years ago, and I'm going to show you what I feel I've accumulated in my 38-year career of trading, which will actually be the correct way to trade support and resistance, because I feel that the majority of traders trade the actual technique actually incorrectly. And I'm going to show you today how simple it is to apply this technique, which will hopefully increase your odds for success in any market and in any time frame. Once again, welcome. My name is Stephen Primo. I am the president and founder of Specialist Trading. And for those of you who are unfamiliar with our website, we are first and foremost an educational company. As you'll see in this presentation today, we are all about educating you with the right tips and techniques and strategies so that you can educate yourself, so that you can really take control of your own trading, so that you can empower yourself, so that ultimately you will make the decisions for yourself. You see, it's been my opinion that the reason why the majority of all traders fail is because you're relying on an outside source to tell you how to trade, what market, what time frame, and this is really taking you out of the game. You're not a part of the process. So what we try to do is empower you with all the tips and techniques and strategies I've accumulated so that you can empower yourself. I mentor you along the way with our strategies, but then we basically just say, well, you should be able to trade these on your own now, and you should be able to make your own decisions. This is where I feel true consistency comes in the market. So we're all about educating you so that you can make your own trading decisions. Now today I'm going to show you and educate you a lot of great techniques so you can start using them as early as tomorrow if you'd like. But before we do, as always, we are required to show you a disclaimer, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using what I feel is the correct way to trade support and resistance. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this disclaimer, so as you're taking a brief moment to view it, I would also like to invite each and every one of you to follow us on Twitter. If you haven't done so already, there is our handle there. It's abbreviation for Specialist Trading. It's at SPCLSTTRADG. I post information on a daily basis for you, anywhere from daily financial wisdom to actual signals that our strategies have generated. In fact, one of our most popular strategies, strategy number 4, generated a signal in the Forex markets just last night, yesterday, that all of our Forex members were privy to go long the Australian dollar. And in just one day, that generated over 100 pips, or roughly a good $1,000 per contract. So this is all part of the strategies that we teach. Once again, strategy number 4 generated a buy signal that we posted. But we realize that the information on Twitter is rather limited. So if you'd like to get more access to what we do, some videos and some more training, my sister site, which is Pro Trader Strategies, has put together a Facebook page, and they have a lot more information, a lot more ways to find out what we do and watch some videos. So you can go to Pro Trader Strategies on Facebook and get information about myself and our courses. Okay, so that's the information on how you can find out more about us. Now, as I stated, we are an educational company. I know a lot of people don't understand what this means. It means that we're not about simply force-feeding you signals and telling you what to trade and how to trade. We're not about keeping statistics that we know won't be able to hold up, because if you look at it, most companies that have statistics and have analytics and have a lot of systematic approaches, they don't hold up, and ultimately those systems fail and they blow up. So what we do is we teach you all this information so that you can make your own trading decisions and become a part of the process. The reason why I feel so strongly about this is because this is what was able to turn my trading around. As I've stated, I first started trading on the floor of the Pacific Stock Exchange roughly about 38 years ago, but my first 2 years on the floor were tremendously difficult. I was doing all the things that you were supposed to do, trading all the simple techniques, going to all the seminars, all the conventional wisdom, and guess what? Nothing was working. Nothing was sustaining me and able to trade more than have a couple of winning trades, because then I'd give everything back on the third trade. I'm sure a lot of you are going through the same process. It wasn't until my mentors told me to strip away all the useless noise, they called it, and just to concentrate on the market itself and become a part of the process, to make my own trading decisions, not to rely on what some guru was telling me or what someone was saying in a chat room, but to just simply rely on what I was seeing in the chart in front of me. And that is what has been able to sustain my trading for going on 38, 39 years now. Okay, so this is what I try to teach all of my students and all of our members, how to trade with the specialist edge. This is the same edge that turned my trading around. Hopefully it will be able to turn your trading around through my mentorship. Now, one of the things I want to say before we begin, since this is going to be conducted like a classroom, please, if you happen to have any questions, I want to answer each and every one of them, but please wait till the very end. I know a lot of people have a lot of questions while the presentation is going on, and many times that question will be answered on the next slide. So if you have a question, please wait till the question and answer period, and then we'll get to each and every one of them. The only question I will answer at this point is the most popular, and is this being recorded? Yes, it is. It is being recorded, so you can request a link from Pro Trader Strategies, and they will send you a link to this recording. If you're having difficulty seeing it, or technical difficulties, or if you have to leave early, they will send you a link. Okay, so questions at the very end. Why don't we begin? And let me start out by sharing with you what my mentors taught me. When I was struggling tremendously, here's what they said. They said, Steve, it is the easiest thing in the world to complicate your trading. Anyone can do that. But at the same time, it is the most difficult thing in the world to simplify your trading. I mean, think of that. Anyone can overcomplicate your trading. You can pile and pile and pile on more indicators, more fundamental news, more news events, more things to watch, more trading rooms, more chat rooms. You can pile on just a multitude of things that will supposedly tell you when to buy and when to sell. And you can overcomplicate your trading like crazy. For some reason, we've been taught that this is the way to become successful. And in all actuality, it's the opposite. Because if you simplify your trading, it's very difficult because you have to learn to let go of these things that for some reason we've been taught are supposed to work. But in my 38 years, I found that there's no consistency in them. But if you have enough courage to let go of them and just say, you know what, I'm not going to use these things that everyone tells me are supposed to work, and simplify your trading, that's when you start to become consistent. This is what has sustained me for 38 years. So remember, anyone can overcomplicate their trading. It doesn't take someone who's been skilled for a long time to do that. You can be trading 2 weeks and have the most complicated of all trading plans. But it really takes a lot of character and a lot of courage to simplify your trading, to have 3, 4, maybe 5 rules at most. Okay? All right, so here's what you're going to be learning today. We're going to start out by sharing with you what conventional trading is using support and resistance. This is the way most people trade using it. This is the way I traded when I first started trading using support and resistance. Then we're going to go into what I feel is the true definition of support and resistance. Having been around for this long enough time period in trading, I really have come up with my own definition, what I feel is the true definition of support and resistance. Then we're going to share with you the correct way to trade with support and resistance. And then lastly, I'm going to show you one last technique that will increase your chances for consistency even greater. And this is at the very end of the presentation. All right, so let's start out. Let's start out by looking at a conventional way of trading support and resistance. Excuse me. This is the way most people trade. Once again, over 30 years ago, I was trading it this way. And this is what is being taught to the majority of traders when you first start out. Here's the standard definition that you'll find in any textbook. Support and resistance is a concept in technical analysis that states the movement of the price of a security will tend to stop and reverse at certain predetermined price levels. So in other words, we're looking for some type of trend or some type of movement to get to a certain price level and then stop and reverse and go in the opposite direction that it had been previously going. If we look at this standard chart here, we see that this is an older chart in Apple. And once again, I'm going to start out with older charts just for educational purposes. Then I'll show you charts that are as recent as this past week. But if we look here, we'll see, well, looking at this chart in Apple, here is where the support is. Obviously, we've come down to this level. We can't go below it. So this is where the so-called support is. And we stop and reverse and we go in the other direction. And it just doesn't work with finding out the support for the bottom. It also works with resistance. If we look at this daily chart of the E-mini, we see that price has gone up to a certain level. It's tried to go through it, but it can't. So this is our resistance. Now, whether it's a ton of institutional traders there, whether it's something else, whether it's some Fibonacci level, regardless of what we want to label it, it is resistance. We can't go through there, so price will stop and usually reverse. This is the way support and resistance is supposed to help us when it gets to these certain predetermined levels. Here's the only problem. Because this is what I would read. I do all the studying. I make sure all the parameters were met. And I say, well, okay, looking at this older chart of TGT, obviously this meets all the parameters, all the rules. This is the support. So guess what? If we start to go up, or if we get, right around this level here, I'm going to buy once again. Let's just say we jump in and buy, and this is what happens. Okay, does this look familiar to anyone? Now, this doesn't just have to happen on daily charts of the stock market. We can also apply this to Forex currency pairs. Here's the euro dollar. Once again, price has been going lower, but we seem to have hit some type of a bottom or support here. Let's say whatever program or charting software we're using, based off maybe institutions, volume, Fibonacci levels. It could be based off the tides of the ocean. It doesn't matter, but it's calling for support right here. All right, so it should work. This is, after all, what we've been taught. This is the standard format of support and resistance. When we get to resistance, we want to sell. When we get to support, obviously, we want to buy. So if we were at support, that's where we want to jump in and buy, and look familiar once again to anyone. You see, when we're trading this, we have found out that sometimes it will work, but more often than not, it doesn't work. This can also be applied to intraday trading. Here's an older chart of IBM, okay, on an hourly time frame. So we don't have to just look at the currency pairs. We don't have to look at stocks on a daily bar basis. We can look at 60-minute time frames in IBM. Obviously, we've been going higher. We meet some type of resistance. So after all, it worked before on a stock or on Apple or something. So let's intraday trade it using the same parameters. So we sell thinking that we're going to go much lower, and look what happens. And all the while we were going up, we kept being met with different levels of resistance, and each level was broken. Okay? So what did I learn when I first started trading this? I learned that there was no consistency in using and trading support and resistance the way conventional wisdom tells us to trade it. Why? Because it's too subjective. One trader's support is another trader's resistance. One trader looks at volume for support. Another trader will look at what the institutions are doing. In fact, I was on the floor. I had inside information. I was privy to what the book was, what the orders in the book were. I was privy to what the institutions were doing. So I had this information right in front of me. On a first-hand basis, I could make a phone call and find out where the sellers were and where the buyers were, and I still couldn't make it work for me on a consistent basis. Sure, it would work every once in a while, but over time, it was just like playing the slot machines. I'd have one or two nice, little jackpots, but then over time, I would see that I really had nothing to show for all my hard work. So what is the true definition and application of support and resistance? Now, this is my definition after years and years of trying to make it work, but then I realized what support and resistance really is. And I'm not saying this to be arrogant or condescending, but this is really all it is. When you simplify things, all support is, it just means that there are more buyers than sellers at a particular point in time and at a price level. Does it mean that these particular buyers are going to stay there? Absolutely not. I used to work on the floor. I was a specialist. I was in charge of 35 stocks, making markets on over 35 stocks. I saw where the orders came in. I saw when orders were placed. I saw when orders were canceled. I knew when big buyers would come in and make this so-called support. And was there ever any type of guarantee that they were going to stay there for loads of time? No. Sometimes they would enter an order and then half an hour later cancel it. So what happened to the support? The support was no longer there. So it just meant that at a certain point of time, there were more buyers than sellers, so that's what kept the price up at this certain level. But there was no guarantee that those buyers were going to stay there. Now, conversely, all resistance means then it's just the opposite side of the coin. It means that at a certain point in time, there are more sellers than buyers. Are the buyers, or I should say, are the sellers guaranteed to stay there? No. They can pull out in a minute, a day, or a week, or a month. It doesn't matter. But we have no idea how long these sellers are going to be there, which will create the resistance. So if we have no guarantee how long they're going to be there, they could be out in 30 seconds, why should we in any way try to bet off that? Or why should we try to use that as our buying point or selling point? It's silly. It's just basically a crapshoot. We're just hoping and praying that these buyers are going to stay or that these sellers are going to stay. But it's a silly way to base your trades off of. Okay, because we can't base our trades. Once again, as I stated in the opening statement, the majority of traders fail trading any market, any time frame, because you were relying on outside sources to tell you what to do, how to make your decisions. So in this case, you're relying on an outside source to create the support and resistance. We shouldn't worry about that. We shouldn't worry about where the institutions are, where the volume is, where the full moon is. It doesn't matter. All that matters is that at a certain time there are more buyers, at a certain time there are more sellers. So what is the correct way to trade this then? If we're not going to trade it the conventional way, how do we trade it? Well, we're going to sell support and we're going to buy resistance. We're going to do the exact opposite. We're going against conventional wisdom. In other words, we're not going to buy where a so-called support level is. We're going to wait for it to be violated and we're going to sell into it. Because we know now once it's been violated, that means there's no more support there anymore. And we're going to buy the resistance because once that resistance has been violated, well, there's no more resistance. There are no more sellers. So it's a free and open market now. Let me show you what I mean here. Here's what we're going to be looking for. This is what support looks like in its most basic and simplest form. It's a 3-bar pattern. That's all that we're going to be looking for in terms of support. We don't have to look at volume. We don't have to look at trend lines. We don't have to look at all this convoluted logic. Remember, it's easy to make things complicated. Keep it simple and you'll get on that road to consistency. So all we're looking for is this 3-bar pattern where you have a low, followed by a lower low, and then followed by a higher low. You kind of create this V pattern here if you connected the bottoms. This so-called dotted line here is where you call support. All right. Once this is broken, we're going to sell. That's all we're waiting for. Now that is what support should look like. Conversely, here's what resistance looks like. You have a high, followed by a higher high, followed by a lower high. It's a 3-bar pattern, the same as the support, just upside down, and you create this kind of an arrow if you connect the dots, okay? Upside down V. This is all resistance is. It doesn't have to get more complicated than that. Resistance is a 3-bar pattern. That's it. And so once this resistance is violated or broken to the upside, we are going to be buying. You see how we're doing the exact opposite. We're going against conventional wisdom because over time, conventional wisdom absolutely does not work. There's no consistency to it. Now, first of all, don't get me wrong. I'm sure there are a number of traders. In fact, I know some traders who actually trade using the conventional way of support and resistance. And they make a fine living off doing this. But they're probably the 1% of all traders. Most traders cannot trade this way, myself included, because it's too subjective. It's far too subjective trying to pick out where the exact resistance or exact support is and if it's going to last. So therefore, you know, the remaining 95% of us or 98% of us cannot trade that way. So we have to use it a different way. And in my 38 years, this has been the best way and the correct way to trade support and resistance. So now, I know a lot of traders have a problem with this because they say, well, Steve, I've been studying this. You're right. There isn't a lot of consistency, but it's very difficult for me to look at support and resistance this way and just make it as simple as a 3-bar pattern because this is the way I view resistance, okay? This is some members have told me, some of our new students, they say, I've always been taught it has to look like this, where you have a bunch of instances where it's trying to break through. I have a much better idea at looking at this as resistance as I do just looking at 3 bars. If you have trouble with that 3-bar pattern, know this, that every 3-bar pattern looks like this on a smaller time frame. So here's a 60-minute time frame of IBM. Let's go to the next higher time frame, which would be a daily bar, and guess what? The exact same amount of time is right here. And what does it come out to? That 3-bar pattern. A high, followed by a higher high, followed by a lower high. So know that this same 3-bar pattern on a 60-minute time frame is much more conventional. So don't worry about that it doesn't meet what you've been taught. It can go for this example here of the Eurodollar. A lot of people say, well, Steve, this is the way I've always pictured support. Support looks like this. It's not something as simple as 3 bars. Well, here's a daily bar of the Eurodollar, okay? Let's go up to the next time frame, which is a weekly time frame. And guess what? Here's the same time span, the same time distance, but we've condensed it now because now we're looking at weekly bars. And what is it? It's the same 3-bar pattern we talked about. Low, followed by a lower low, a higher low. So all support and resistance is a 3-bar pattern, okay? On a smaller time frame, it will meet your older needs of looking for a very complex top or complex bottom. But we don't need to look for that. All we need to look for is this 3-bar pattern to keep things as simple as possible. All right, so let's look at some examples and showing you how simple it is to trade, support and resistance the correct way instead of what conventional wisdom tells us to. We look at this chart here, this older chart in WEC, we see that, well, price is going straight up, okay? Now, it's easy to say that, well, yeah, Steve, we were going up a while ago, okay? But all the time we were going up, what were we met with? We were met with high followed by high, high, lower high, okay? That 3-bar pattern all the way up. So at each time we got up here, someone was saying, well, this is resistance. You see how we can't get through? Again, this is resistance, and this must be resistance right here. And each time we went through it, that was your signal to buy. Okay, you see how simple this is? So we're not trying to use this as a point of selling. We're trying to use it to make sure that once we break through, that's our point to enter into the trade. How about SLV? Okay, this is the ETF for silver. All right, silver was going much, much lower, much, much lower. People the whole time were saying, well, maybe this is support right here. We made a real sharp downward move, and then we kind of bounced up. So this must be some type of support. And then when that broke, well, this must be some type of support. Here is that 3-bar pattern again, okay? And you see it all over the place. Each time that 3-bar pattern is broken to the downside, that is your indication to sell. So you see how you would have lost a lot of money trying to pick a bottom on silver. It would have been silly based off of conventional wisdom ways of trading support and resistance. But once you know that there is no such thing as support and resistance and the conventional standards, we're simply going to wait for that to be violated and jump on board. Now here's the only problem with that. You see that those were really ideal situations, but from time to time you may see a situation as you do here in this older chart of Oracle. As you see, we had some of those 3-bar chart pattern right here where they created tops. So you would have purchased at each and every one of these places hoping for a rally. But then once the bottoms were violated, well, then you went short. Okay, so you lost a little money. You bought here and then you simply sold hoping for price to go lower at a loss. But price didn't go lower. Price went up. And you're still short, and so you bought and covered for another loss, and now you're long, hoping for price to go up before it breaks this bottom right here. And it goes up a little more, you buy a little more, and you think things have finally turned around. But guess what? If we go below here, you're going to have to sell again for a loss. And some news came out, we gapped down, you sold much lower, and now you're short, and price is starting to go up. So this is a typical whipsaw market when you're in a range, and there really is no play off of this certain type of play, the correct way to trade support and resistance, because we're in a ranging market. In fact, 99.9% of all strategies or techniques don't work in a ranging market. So how do we still trade correctly with support and resistance when we have environments like this? Here's the rule. Here's how we can increase our odds for trading in any market using this technique. And you can start using this as early as tomorrow. Only buy resistance in an uptrend. Okay, so we're not going to just see this in a sideways market. If we see a sideways market, we're not going to try this technique. Right? We're not going to look for that 3-bar pattern for price to trade above. We're only going to buy if we are in a clear-cut uptrend. And conversely, we'll only sell support if we're in a downtrend. So price needs to be established that it's going lower and lower. We cannot see sideways markets and say, well, I'm going to try this technique and see how it works. We have to see that we're going higher in order to buy resistance. We have to see that we're going lower in order to sell support. Now, a lot of people say, well, Steve, how do I know that I'm in a trend? Okay, everyone has a different idea. Every trader has a different definition for what a trend is. These are some of 3 generic but pretty powerful tools here for defining what the trend is. You can use indicators. One of the most popular are moving averages. If you like to trade intraday, you probably want to use a smaller moving average, such as a 10 or a 20 period moving average, and then the slope of that average will tell you the direction of the trend. Or you can look in patterns, okay? Different patterns within the actual market you're trading. Higher highs followed by higher lows equal uptrends. Lower lows followed by lower highs equal downtrends. And then lastly, you can look at different time frames. You can look at a higher time frame to make sure that the lower time frame is in sync with the higher time frame. That tells you the overall trend. Okay, a lot of people like to use that. These are all fine. They're all very generic and very standard, and they come with a certain level of consistency for telling you what the trend is. So you can apply these as early as tomorrow, and they will do an okay basic job in determining what the trend is by using the correct way to trade support and resistance. But guess what? There is an even better way to find out what the trend is, and this is what I want to share with you today. This is trading support and resistance with the PET D. If you've attended my presentations before, you know how much importance I put into the PET D. It's a tool I was introduced to some 38 years on the floor of the exchange that at the time we had to calculate by hand. It's a simple formula, but something that you have to calculate by hand is a little cumbersome. But with the advent of high-speed computers and programmers, we now were able to put this and define it into a proprietary color bar algorithm. So when you see a series of green bars, that's telling you you're in an uptrend. And when you see a series of red bars, you're in a downtrend. So that's how simple that is. We don't have to look at the higher time frame to tell us what to do in the lower time frame. We don't have to look at a ton of indicators to tell us what the trend is. And we don't have to look at patterns. Remember, keep things as simple as possible. My mentors introduced me to this tool, and this has really changed everything for me in terms of finding out what the short-term trend is. Once you know the trend, it's easy after that, because then you just have to be in sync with the trend. You can apply any strategy, any technique, and you automatically increase your odds for consistency because you've got the trend at your back. You've got you're swimming downstream. You're not bucking the trend and swimming upstream. All right, so here's how we're going to apply it with this technique I share with you today. Here's a buy pattern. We're going to look for price to trade above an all green pivot high, or that's the standard support and resistance high. And we're going to buy when price trades one tick or one pip above that resistance. So here was the pivot we're looking for. This was the 3-bar pattern. But remember, we can only apply this now if we're in an uptrend. So how do we know we're in an uptrend? Well, if we apply the PET D, all 3 bars must be colored green. And that's it. If all 3 bars are colored green and we see this pattern, this is telling us that we are in an uptrend. This is so-called resistance, and we're going to buy if that resistance is broken or violated by 1 or 2 ticks. Now, conversely, we're going to sell. We're going to look for price to trade below an all red pivot low. So we're going to sell when price trades 1 tick or 1 pip below this so-called support. So here is the 3-bar pattern we were looking at before. This is what we defined as our support. Remember, on a smaller time frame, it's very complicated. It's more extended. It's kind of a backing and filling. But when we condense it into 3 bars, we can keep it simple, but we still want to trade in sync with the trend. So how do we know we're in sync with the trend so that we can sell? Well, you apply the PET D, and you want to see that all 3 bars are red. If just these 3 bars are red, you're in a downtrend, and you can sell when price trades below that so-called support. So that's how simple it is. We're looking for this 3-bar little indication here, this 3-bar pattern, and then we're looking for the PET D to color them either all green or all red. All right, so let's look at some examples now and show you how simple it is to trade this technique when you're in sync with the PET D. Here's a chart in urban. As we can see, all the bars are green. Now, someone looking at this would say, well, Steve, this is easy to see that we're in an uptrend. I don't need this indicator to tell me we're in an uptrend because looking back in hindsight, I see we've been going up for weeks. Well, sure, it's easy to see in hindsight, but would you have known way back here that you were in an uptrend and that you had a so-called resistance point well back here? How would you have known just looking at these 3 bars that you were in an uptrend? You had no reference to tell that. But the PET D already told you were in an uptrend, so you could have purchased here, 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 all the way up. How about Chipotle? There's been some news in Chipotle lately, very bad news, how they've found some E. coli in a certain store and how a lot of people have been getting sick. The stock has been falling lower and lower. If we look back here, going back a couple of months, well, the PET D signaled well in advance that we were in a downtrend, well before this news came out. We were originally green, but going back, we see that we started to turn red. Now, once we know that the bars are red, we look for that low, followed by a lower low, followed by a higher low. And you see they're all the way down. Prior to this news event coming out, we could have set where this so-called support was, And each time it was violated, that's our sell signal. So you could have sold way back here and held this as a short as long as you wanted to. And you see how you are in sync with the market now, how it's much easier to trade this way of support and resistance as the standard way. All right, and we realize this is an expensive $700 stock, and not everyone can short, a $700 stock, but you could have easily purchased puts. You could have just gotten long directional puts here and gone short roughly around 700, and the stock went down a good 250 points in the next 2 or 3 months. Really simple, just using the techniques we're showing you, because the PET-D is giving you the confidence to know you're in sync with the downtrend, and then you're just selling in sync with that downtrend. Now we can apply this to ETFs on the market, on indices. Here's the IWM, the ETF for the Russell 2000 index. As you can see, when we were going up, the PET-D colored all the bars green. As soon as we changed direction, as soon as way back here, we weren't even in a downtrend yet, a full-fledged downtrend, but the PET-D had already had 3 bars telling us we're going down, and then as soon as things started to firm up, the PET-D turned green. Well, what I taught you today, all you would have had to do is apply that 3-bar technique and see how you could have bought while you're going higher, sold while you're going lower, and then got back in again once you're going higher. You see, it really is a recipe for disaster when you try to trade traditionally support and resistance, because the entire time you would have been trying to sell here until you finally most likely would have given in, thrown in the towel and given up, and that's when it started to go lower. So now that it's going lower, what do most traders do? Well, they say, well, I'm going to make it back, so I'm going to start buying. And you keep buying and you keep buying until it goes lower, and finally you throw in the towel once more, and that's when it starts going in the direction. It's a lot easier just to be in sync with the trend, and the PET-D does such a great job of getting you in sync with the trend, and then you just have to apply a little structure to it, and that's how you can really start to become consistent. Let's look at some E-mini examples here, different time frames. Let's start out with a 30-minute time frame going back this past month. Once again, in hindsight, someone would say, well, sure, it's easy to see we've been in an uptrend, but how did you know you're in an uptrend way back here when price hadn't even started to go up yet? Well, the PET-D already started to color the bars green on this 30-minute time frame, so you could have applied this technique way back here at 1955, gone up about 40 points in the E-mini, or $2,000 per contract in just 3 or 4 days. That's a 30-minute time frame. Let's go to a tick bar chart. This was a couple of weeks ago where we went straight down and then back straight up. Do you see how the PET-D changed colors in sync with the trend well before most indicators would tell you that the trend had changed? Now, all the way you're going down, you could be selling. All the way you're going up, you can be buying. We can look at another 2500 tick bar. This was last week as the market was falling out of bed. All the bars are red, so what does that tell us? Are we going to look for support? Well, we are going to look for support, but not to buy. We're looking for support to sell. You see how simple this is? If you had tried to look for support to buy in this certain day, do you think you would have made any money? I don't think so. You would have lost a lot of money looking for support using conventional support and resistance type of techniques. The best thing is just to exploit them. Once you trade below the so-called support, sell. Now this just happened last week. This was actually a week ago. This was last Wednesday on a 15-minute time frame of the E-mini. If you look here in the lower left-hand corner, you see it's 12:02. This was last Wednesday. We started out the day kind of flat, and then we started to head lower. So looking at this chart, we are saying, well, it looks like we're kind of in a downtrend, but actually maybe we made a double bottom based off conventional support. This is probably where I should buy right here. We're looking to make some type of bottom here. We're most likely going to go back higher, okay? And I'm sure the institutions are coming in because this is some type of Fibonacci level or some type of Elliott wave, and we should be making a new high here. Remember, that's overcomplicating your trading. Trust me, I used to think that same way. You know, I used to think, well, what's the volume doing? What are all these indicators saying? What's the news coming out? It's ridiculous because you're just giving yourself too much overload, too much input to trying to discern. And most likely, you're going to just, give yourself too much information and you won't know what to do. The best thing is just to apply the PET-D because it tells you what direction you should be trading. What it is it's a translator. It translates what the market is trying to tell you, okay? So the market is either trying to tell us it wants to go higher or it wants to go lower. Once you apply the PET-D, Coming into this day, the market was telling us, well, we're most likely going to be going higher. But at this point, it told us, nope, we've changed. Now we're going lower. So now at this point, you know to be only a seller, and you're going to sell the so-called support. Now, had we tried to buy here, this is where we would have purchased, because here's the so-called resistance, and we're going to buy resistance, but it would have to have broken above. As you can see, it never did. So once the trends change, we're going to look for so-called support right here. Here's that 3-bar pattern. Here's the other 3-bar pattern and another one. So you had 3 of them right here at midday. This was last week. And look how easy it is to trade this way. You didn't have to listen to any news. You didn't have to use a ton of indicators. You didn't have to look at any volume. You didn't have to look at a higher time frame to tell you what to do on the lower time frame. Don't overcomplicate the trading. You could have taken just one of these signals and made about 16 or 17 points or $800 per contract. Lastly, we can still apply this to the Forex markets. Nothing's changed because we're going into a different market or a different time frame. Here's a monthly chart of the Canadian dollar going all the way back to 2013, almost 3 years ago. All right. As early as March and going into May of 2013, what did the PET-D tell us? It told us that we're in an uptrend. Well before we went all the way up here, it already was telling us we're going higher. So all we have to do is jump on board. See, our job is just to listen to what the market wants to tell us and then jump on board. Now, how do we know when to jump on board? Well, we just apply some type of structure. In this case, we look for those short-term tops, which are the so-called resistance. Had you been trying to trade off resistance, you would have lost some money doing it. But it's much easier just to exploit it and buy once resistance has been broken. Now, what about on a daily chart? Here's the euro dollar. The euro dollar had been going lower coming into this chart. All right. And the PET-D knew it was going lower because all the bars were colored red, well in advance of the huge downward move. So if we're red, we look for that 3-bar pattern, and then we just sell once it's been violated. All right, so let's recap before we go into question and answers. I know you may have some questions here. Remember, we showed you the conventional way to trade support and resistance. This is the way I was originally taught. This is the way the majority of people trade support and resistance. And in my opinion, this is why most people fail, because there is no consistency that I have found in my own trading, as well as a good number of students I've mentored along the years and other traders I've met, in trading the conventional way that we've been taught to trade support and resistance. Why? Because it's too subjective. Everyone has a different idea of what determines what support is and what determines what resistance is. Some people say, well, it's an institution, Steve. They determine what it is. Other people will say, no, 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 it's Fibonacci levels. That tells you everything you need to know, all these different levels. Still, other people will tell you it's based off the full moon or the tides of the ocean. Everyone has a different idea of what support and resistance is. And there are a few traders that are able to do very well trading that way. But the majority of us have very difficult time trading that way. So in my 38 years, what I found the true definition of support and resistance was just simply at one point, there were more buyers than there were more sellers. That's what kept the price up at a certain level. Were they guaranteed to stay at that level? No. At a certain time, there were more sellers than buyers. That's what kept the price from going higher. That's what so-called resistance is. Were they guaranteed, these sellers, to stay there? No. So why would we bank our hard-earned money on betting that it's not going to go any higher or not going to go any lower? They can pull out of their order anytime they want. I saw it happen all the time. So why would I bet on they're going to hold up price or they're going to keep price from going higher? It's better to do the opposite. Okay, so that's the true definition of what I have learned what support and resistance is. And the correct way to trade support and resistance is to do the opposite. We are going to buy into resistance once it's been violated, and we're going to sell support once it's been violated. I just showed you examples in stocks, in the futures market, and in currency pairs. I showed you daily bars, I showed you tick charts, I showed you monthly bars. That's how well this works, this technique. Now you can apply any trending technique you'd like, because that's how you're really going to be able to see how this is really a consistent technique. Remember, we only want to trade this way in sync with the trend. So you're only going to buy resistance if you're in an uptrend. You're only going to sell into support if you're only in a downtrend. If you see a rangy sideways market, you're not going to get involved because most likely you're going to be whipsawed. Now here's the trouble. Most people have a difficult time of finding out what the trend is. Everyone, every educator, every website has a different definition of how to find out what the trend is. And most of them are just subpar. They're not very good ideas for finding out what the trend is. What I found out to be the best, most powerful, but the simplest way to determine what the short-term trend is to apply the PET-D. That I've been applying for roughly 38 years, and that has really helped me tremendously trading any technique, any market, because it gets me in sync with the market. All right, the way to become consistent is to simply be in sync with the market. The only trouble is most people have been taught to do the opposite. Remember we stated what the conventional definition of support and resistance is. Price is going to get to a certain level and then stop and reverse. So then we want to try and figure out in advance where we're going to change. That's silly. It's much easier just to say, listen, the market wants to do this. I'm not going to try and figure out anything. It's going downstream. I'm going to swim downstream. It's going the opposite direction, upstream. I'm going to swim upstream. But I'm never going to fight it. I'm never going to fight the current. Right? This is the key to simplicity. This is the key to consistency in your trading. All right, so before we go into questions, just let me offer you this special offer we have for all of our attendees today. We're going to offer you the PET-D. This is our roadmap for any market. As you saw here, I showed you all the examples how it's simply an algorithm, a proprietary algorithm that is based on momentum. But that's about the most information I can give you. It's based off momentum that is really telling you in advance, better than any tool I've found in 38 years, what the trend is. You can apply this to currency pairs, to tick charts, to forex, excuse me, to e-mini trading, to stocks. It doesn't matter what market you're looking at. We even have traders using the PET-D on sugar and on heating oil, on commodities. That's how powerful it is. Now with this, the PET-D course, you also get the add-on, naturally, that will change the bars from red to green, but it also comes with 2 continuation trading techniques, 2 pullback trading techniques, and a trailing stop technique, all right? This also comes with my personal correspondence. You can contact me whenever you'd like. You are now my student for life, and I will answer any question you have about trading with the PET-D and different types of strategies and different types of techniques. Now, here's one thing we didn't bring up about this roadmap for any market using the PET-D. You can also apply it long term. We showed you a few examples, but let me show you how you can apply this to your long-term IRA, your long-term portfolio. Here is a monthly chart of the S&P 500 index going back 20 years, back to 1995 if you look in the lower left-hand corner. Each one of these bars represents a month in the market in the S&P. Now starting back in 1995, you see how the market really started to take off, and we really had this really nice upward move going all the way up into 2000, okay? And guess what? That's where we met the dot-com crash, the dot-com bubble up here, and we fell out of bed, okay? Then price stabilized in roughly 2003, 2004, went all the way back up, went back and retraced all the movement to the old highs, and then in 2007, 2008, what happened? The banking crisis, okay? The financial crisis hit, Great Recession happened, and price really fell out of bed. We had a nice mini crash here coming into 2010. But that's when prices started to firm up again, and we've been going up ever since, making new highs all the way up, okay? But when are we going to top out again? How do we know? Wouldn't it have been nice to know when the trend changed and when it was time to get out? What if you were, in the market, and wouldn't you have loved to have gotten out of the market before the crash happened in the dot-com crash, then got back in while we were going higher, and then once the banking crisis started to unfold, you could have easily exited and not gotten back in until price started to get back on its upward movement again. And how would you like to get out knowing that the trend has changed? Well, all you have to do is apply the PET-D. Okay, because the PET-D can also identify long-term trends, as you see here. The majority of the bars are green. What we look for is a confluence of 3 or more bars of a different color to tell us the trend has changed. Now there's 2 red bars here, 1 red bar here. It wasn't until 2000 that we had 3 red bars. So you could have used that as your signal that the trend has changed. You could have exited positions or tightened your stops or just, stopped investing, and you would have bypassed the dot-com crash. Once you had 3 consecutive green bars, it's back in the market. You could have ridden it all the way up to 2007, the latter part of 2007, exited the markets with this nice gain and bypassed the banking crisis. Then you could have gotten right back in again in 2009, 2010, and you would still be in the market. Now, the last couple of months, we had 2 red bars. It looked like we were changing trend, but guess what happened? We went right back up. Wouldn't you like to know on a long-term basis when we're going to have 3 red bars? Well, you can if you are a member of the Pet D course. That's the beauty of the Pet D. It can work if you're an intraday trader. It can work if you're a long-term investor. It can work in any market and or time frame. So here's our end of year special, because the Pet D is such a popular program. We have hedge fund managers using this. We have people that just started trading using this. It's traded in every state within the United States. It's traded, I believe, in over 92 countries around the world. That's how popular this tool is, okay? The price is definitely, this is not a tease. This is not something that we're just, telling you off the bat. The price is definitely going up in 2016 in the next 2 or 3 weeks. Okay, we're going to increase the price. It's that popular of a tool. It's that powerful of a tool. We're offering you a last chance here to make 2015 a good year for you so that you can get on the right track in 2016. So here's our attendee discount. We are dropping the price for $14.95. We're keeping the price for $14.95 for our attendees with a $97 a month fee, but this is for a limited time only before the price goes up. And this is really a very inexpensive price for such a powerful tool. $14.95 plus $97 per month. Now, we're also adding another offer. If you'd like the lifetime offer where you just have lifetime use of this and don't have to worry about paying a monthly fee, it's $24.95. That's lifetime access. You don't have to worry about any price changes. It's yours. Now, in the 38 years I've been using the Pet D, we've really never changed anything. So it's not like we're going to be changing all of the rules and updating the versions so that even if you have the lifetime access, we're going to hit you with another fee 6 months down the road. It's most likely going to stay the same because it's that powerful. The charts I just showed you have been the same charts I've been using for years. So here's the attendee discount. Here's how to take advantage of this great offer, because trust me, the price is going up. Starting 2016, this is going to be a lot more expensive than what you see right now. As I stated earlier, my sister site is Pro Trader Strategies. They market and promote all of my courses and all of my techniques. You can contact them by emailing them at trading@protraderstrategies.com or call them directly to get one of these offers here at 310-598-6677. Now also, if you want to take advantage of this offer and go directly to the sign-up page, all you have to do is cut and paste that link you see there at the very bottom. Okay, that's the link. The only problem is it's not live. You're going to have to copy and paste that onto a browser. If you want to go directly to a live link, if you notice in your chat box on the far right, Pro Trader Strategies has posted a live link there, and all you have to do is simply click that on. It will take you to the sign-up page, and you can process and put all the information in, and you can be up and running ASAP. So I'm going to leave all this up here because remember, this is for a limited time only, and I'm going to leave all this information up while I open up the question and answer box. And I want to thank you all for holding off on any questions. And let me start off with the first one. Where is this being recorded? Yes, it is, and you can get the link through. You can get that through Pro Trader Strategies. Okay. Okay, RL asks, is a Pet D a common indicator? No, it's not very common at all. In fact, it's a proprietary tool that, once again, I was introduced to about 38 years ago on the floor of the Pacific Stock Exchange. But at the time I was introduced to it, we had to calculate it by hand. I had to sit there after every day and calculate it on a piece of paper to find out what the tool was telling me. So we couldn't apply it to intraday trading because it would just be too cumbersome. By the time you figured out what the 5-minute bar had done, you would have to get ready to calculate what the next bar was. So it's not a very common, it's a very proprietary tool. We don't go into what it's made up of, what the formula actually is, but it's based off of momentum. And it's the best tool I have seen in my 38 years, as you saw with all those number of examples, for telling you what the trend is. Okay. Al asked, what is measured to generate the Pet D? All I can tell you, Al, because it is proprietary, it's based off of momentum. We measure momentum. Now, the trick is not to try and figure out what the momentum or what the pet D is based off of. The trick is to learn how to use it. Because I can almost guarantee you, if you look on certain message boards, people are always trying to figure out what the pet D is and what it's based off of. And everything I've seen is just about wrong. And it wouldn't even matter if they had the right tools or the right formula, because I can almost guarantee you'd lose money. Because the beauty of the pet D is not in figuring out what the formula is. The beauty in the pet D is getting the education from someone who's been using it for 38 years, so that you know how to properly apply it to your trading. I can almost guarantee that if you didn't know how to properly apply it, you'd still lose money, because you'd be trying to second guess it. You'd be trying to use it for picking tops and bottoms. It does not work that way. Okay, so you're getting in this course and in this great offer, you're getting also 38 years of someone who has used it, who can show you how to use it to get on that road to consistency. Okay. Jim asked, do you exit the trade when the bar changes the color? That's one way to do it. Remember, we're not a systematic company, so we give you a lot of different options. That's one way. In the course, we give you a lot of different options for it in all of our trading courses, a lot of different ways for exiting. It's up to you. Some of our traders like to get in and out rather quickly. All right, that's just their style of trading. There's nothing wrong with that. Everyone should trade what makes them feel comfortable. We're not a systematic company where everyone has to trade the same each and every way. That's a recipe for a disaster, in my opinion. Everyone has to trade their own personality, because if you're not feeling comfortable with a specific method, you'll most likely lose money. So if you feel comfortable getting in and out quickly, well, then you're not going to wait for the color to change. You're most likely going to base it off of some level or some amount, and we teach you how to use that. Now, if you'd like to stay in longer, sure, you can use the pet D. You can use some other tools and other methods and techniques that we teach as well. Lots of different ways to trade these things. Gary says, could you give an example of where it did not work? Well, I don't have any. This is a static chart here, but I can tell you one thing. If you remember that example with the Oracle chart where it was a whipsaw, remember I said 99.9% of all techniques and strategies don't work in a rangy market. Well, the beauty of the pet D is it will not work in a rangy sideways market. And the reason is because you need to have, not only do you need to know what the direction of the trend is, but you need to have some structure as well. The pet D's only job is to apply you with what the trend is. If you're going up, then back down, then going up, then back down, then you're going to see a couple of bars green, a couple of bars red, a couple of green, a couple of red, and it's not going to give you enough to put together any structure. So most of the time, when it's not working, what it's really doing is just simply keeping you out of setups, because it's not validating any setups for you to trade. In other words, you will not see that 3-bar pattern where all of the bars are green. Maybe only 2 will be green and 1 will be red. Well, that's not a valid setup, so you wouldn't trade it. So that actually is a perk. When it's not working, it will keep you out of trades more than have you in losing trades. Okay? Jim asks, does the pet D apply to Sierra charts or NinjaTrader? That's a very good question, Jim. And in fact, it applies to both. In fact, let me read off what it does apply to, what the charting software packages it works on. It works on MT4, TradeStation, Metastock, NinjaTrader, Sierra charts, Interactive Brokers, FCXM, and Thinkorswim users. I know we have a lot of Thinkorswim users. You can apply it, but you have to use the free stock data that you get from Thinkorswim and then transfer it over to NinjaTrader. Okay, so we supply you with a free NinjaTrader platform. Our tech support sets that up for you. And you can be running both at the same time, Thinkorswim and NinjaTrader. So whenever you want to look at the pet D or a certain strategy that we also promote, you can look at them on NinjaTrader and then go back to Thinkorswim. It's up to you, but you're going to get the beauty of both worlds, and we set that up for you free of charge. So there's no extra cost for that. Let me see. Does the pet D come with a lease and water bowl? I'm not sure what you mean by that. It comes with a leash and water bowl. I've never heard it described like that. They're asking for guarantees on the program. There is no guarantee, because we're really giving you 38 years of experience here, and we're teaching you the entire method and all the secrets in the course. But what you can do with any of the products, Pro Trader Strategies has been kind enough to say, listen, If you're not happy with any of the products that we have or promote here, you can exchange after 30 days if you're not happy for any other product that they happen to have here. This could be another technique, a strategy, whatever you like, you can exchange for the price. So if you're not happy with the Pet D, so far I have really, unless they've haven't informed me, I've never met anyone that's wanted to exchange the Pet D. Everyone I talked to is so happy with it. We have users who have been trading just for a couple of weeks that have become consistent just off beginning to use the Pet D with some of our strategies. We also, as I said, have hedge fund managers that apply this to their trading. So I can't think of a reason why you'd want to exchange it. It works that well. I personally use it on a day-to-day basis, so I don't know why anyone would want to. It says, is a data fee required, and if so, what's the cost? Well, it depends on what platform you use, okay? What time frame are you looking at? If you're looking at daily bars, well then, a lot of brokerage firms or platforms can give you delayed data and it doesn't cost anything or it's a very minimal fee. If you're looking at intraday trading, you do have to pay a cost for that intraday data. So it all depends what you're looking for. It all depends what type of a trader you are. We are not a brokerage firm, so we can't quote you any prices. We're an educational company, as I stated at the beginning of this presentation. We just supply our members with education so that they can trade. I would suggest talking to your brokers, but you first have to determine what type of a trader you are. If you want to just trade daily bars, well, that will help. That'll lower your cost because you can just get end-of-day data, which is cheaper than intraday data on most platforms, okay? Let's see, Mike Malden is asking, isn't the method you are promoting nothing more than breakout trading? Well, Mike is referring to the technique we shared today. Yes, this is just a technique. We have upwards of 10 to 20 different strategies. We have pullback strategies. We have things that you may have called such as continuation trades. We do have some breakout ideas, but we have a multitude of different. All I shared with you today was just one out of the 20 or 30 different type of strategies or techniques we have. And I gave that to you today for free. So, this is something that most people aren't aware of. They use it in the opposite form. They use it as support or resistance. The main thing I want to get you to understand today is conventional wisdom in its most traditional sense doesn't work in terms of consistency. And so you see how easy it is, if you want to call this a breakout method, you see how easy it is to apply this to this. If you want to look for consistency, trade in sync with the trend. That's rule number one. And then don't trade conventionally. Trade in sync with the trend, and if you're not trading conventionally, well, then you can call it a breakout method. But this is just one in the dozens or so of techniques that we have at Specialist Trading and Pro Trader Strategies. Peter asks, how is the Pet D different than Heikin Ashi? I don't really use Heikin Ashi, so I can't really tell you. What that's based off. I think of what I've heard some of our students say is that that's more based off of a pattern, and that's more based off like a candlestick type of mode. I don't apply it as all. And once I started using the Pet D over 30 years ago, I really haven't ventured into that. Now you can use standard candlesticks with it. Excuse me. In fact, we have a great candlestick combination with the Pet D that I spoke about this past week. That's one of our most popular courses. It's our candlestick course applied with the Pet D that really increases your odds for success. But it's entirely different parameters than what I taught today. Okay. Let's see. We talked about the platforms. Someone is asking, is it $97 per month? Yes, it is. It's $14.95 plus the $97 per month. Okay. People are asking what software you can use it on. Remember, let me say these charting packages again. MT4, excuse me, MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and thinkorswim users can use the free stock data to run free NinjaTrader charts. Okay, so this is all free, and we help you set this up. thinkorswim just has different parameters for applying indicators, and so it's difficult for us to apply our add-on with them. So it's a lot easier if we just give you a free NinjaTrader charting software. We set it up for you free of charge, and we just apply the data that you're using for thinkorswim. You can run both at the same time, so it's not going to interfere with anything you're using. Okay. Let's see. Russ asks, hi Steve, is there a cooling off period? By cooling off, I don't know what you're talking about. Are you talking about the cooling off of the indicator, the PET D? If you could, Russ, if you could go into a little bit more detail about that. Okay. Let me see. I guess that pretty much answers most of the questions. Remember, I think what I'd like to just end here is with what most people start off a year with. I know trading on the floor of the exchange, this was years ago, but even traders who had access to all this information and were trading with millions of dollars, everyone starts out at the beginning of the year in January saying, this is where I want to be by the end of the year. I want to be making so much money. And even if you're just an individual small trader, most people, even if they make this small goals to themselves just quietly or privately, either you want to make a little extra amount of money, income coming in, maybe you can buy that dream car you've always wanted, to take that dream vacation with your significant other, or maybe you wanted to have enough to have an addition for the house. Either way, you have these hopes and dreams at the beginning of the year, and guess what? 99.9% of them are usually never met. The reason is what I stated in the beginning. We are relying as traders on outside sources to tell us what to do. Usually some trading guru or somebody in a chat room or trading room or some guy on TV or some convoluted indicator that we have no idea how it works or how to apply it. And we're just basically hoping and praying for things to work. And what we've done is we've taken ourselves out of the game. Our philosophy at Specialist Trading is we provide you with all the tips and tools and techniques you need. We teach you along the way, mentor you as long as it takes, and then we want you to make your own decisions. This is the only way you will get consistent in our opinion. So this is our job as mentors. This is our job. I will be your personal mentor, teaching you how to use the same tools I use in my own personal trading that I've been using for over 38 years. You get 38 years of experience as well as simplicity in your trading with strategies and techniques. Okay, I don't think anyone else can really offer that for you at such a great price and coming with great tech support and with such a attention to detail. This is what we offer, and if you really want to start out 2016 and hope that you'll get up to that consistency level that you've been really searching for, this is your great chance to take advantage of that. Because the PET-D is one of our most popular tools. As I stated, I use it on a consistent daily basis. I've been doing that for over 30 years now, and if you want to use this tool, we will teach you how to apply it correctly. If you want to make 2016 your best year ever, and you finally can look back and say, boy, I'm so glad I got on track this year. I've been struggling for years. I finally did it. I think now is your best chance to take advantage of that, okay? So contact Pro Trader Strategies. You can email them. You can call them directly. Probably be better to call them directly because they can set you up with this, and you can talk to them about your charting platform, which is the best charting platform to apply. And then you can be up and running just as soon as possible, okay? I want to thank you so much for attending today. Thank you for taking time out of your Thursday to hear me speak. And I wish you the best of luck trading. And I also look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I wish you the best of luck. I'll see you next time. Bye-bye.